For the first time since 2008, mortgage lenders lost money on every loan, $301 to be exact. Now, that's not even the scary part. Let's dig in. This comes at no surprise to anyone in real estate or lending, right? I mean, we all know things have been tough for some time now. What's interesting about losing $300 per loan is that's not even the concerning stat. $301 loss per loan was actually on an annualized basis spread out amongst independent mortgage banks, mortgage subsidiaries, and chartered banks. Zoom in closer and more recent to that stat, and you'll see that the losses only increased in Q4 of last year, substantially, losing $2,812 per loan in Q4. Former president and CEO of the NBA, Dave Stevens, summed it up best, stating, "The losses are enormous and most IMBs have been losing money on a monthly basis at significant levels. The unfortunate reality is that this cannot continue." While we'll see some uptick in volume with the spring market and the impact of rates from the bank turmoil, many companies will ultimately end up choosing to sell to others or shut their doors. This is the outcome of a market right-sizing of this magnitude. It's needed, unfortunately, and ends up being survival of the fittest in the end. Now, guys, he's right, and we've already seen some lenders call it quits or sell to a competitor. It really is unfortunate because I love this industry and I don't want to see anyone or any company go, but it's part of the cycle, and as much as we all want it to be over, it probably isn't. Now, the good news is, and I don't want to jinx it, the worst may be behind us. Rates seem to have topped back in October, and volumes seem to bottom out in December, both trending in the right directions. Rates slowly back down and volume slowly back up. 2023 Q1 just wrapped, and lenders will start to release their Q1 results, and I believe it will collectively be negative again, but hopefully trending up. We will see very, very soon, and we will report that as well. So, what do we do with all this intel, Ryan? I mean, I'm just an LO on the street, or I'm just a realtor on the street. I can't control my company's finances. Great question, and yes, you actually can. Here's what to do with all that intel at the street level and a you and me level. You control what you can control. You can actually control P&Ls and finances at your level. What's crazy about this mortgage storm compared to the one we faced in 2008 is this time it's impacting the originator at the street. We didn't see LOs getting fired last time. It was more about lending shops closing down. This time we've seen mega producers being let go. Wait, Ryan, mega producers? But they're the best. Everyone wants to be them because they have the most volume. True, but what many of them don't have is the P side of a P&L. They're not profitable, and for the first time in my long career, I'm seeing mega producers let go. Yep, top producers with massive volume being let go because it's not profitable. And it doesn't stop there. Entire branches let go because they're not profitable. Entire regions wiped out overnight because they're not profitable. Never before have we seen moves like this, and now you understand why. You can't stay open very long when you're losing $2,800 on every transaction. And each and every one of us make up that number and represent our company's P&L. The question for you is, are you a P or are you an L? Are you a weight to your organization, weighing them down, or are you a lift, lifting them up? It matters, guys, and you can control this. Are you helping to right size your company? Or are you still bragging about the size of your team? I'd love to help redefine what winning looks like in this business. It's always been, look how big my team is. Let's swap that out for, look how efficient my team is. That's a real win to celebrate. More importantly, that's a sustainable win. Are you helping to address other fixed costs like staffing and leases? Or are you holding margin or giving away the farm with pricing exceptions? These are all levers to pull when talking about running a sustainable mortgage and real estate business. And as you can see from the recent reports, it matters. It's always mattered. Team, I encourage you to be on the right side of this conversation. It will make you a better leader. It'll make you a better operator in this business. We'll wrap with the good news. Yes, the worst appears to be behind us, but we're not out of the woods yet. Stay committed. Work with your leaders and owners to help get back on the P side of a P&L, and we'll get through this and we'll be better for it. See you guys next week.